Bull Market Bulletin.
Welcome to the deep dive. Today we've got a really interesting set of sources lined up. Some videos from financial analysts and some pretty cool market data. You can think of this deep dive as a way to quickly get up to speed on, Bitcoin, the AI market, where they stand here as we kick off 2025, and how this stuff might impact your portfolio.
Yeah, what's really interesting is that these trends, at first glance, they might seem kind of separate, Bitcoin, AI, but they're really deeply connected. So we're not just going to, lay out the facts. We're going to show you how they all fit together, help you see the bigger picture.
Okay, so let's jump right in. Bitcoin, everybody's talking about this bull run. It's been going strong for 3 years now, a 500% increase since bottoming out at $15,500. But one of the experts we're looking at today thinks the really big games might be behind us.
Yeah, and it's important to understand why he thinks that. He uses this model called the logarithmic linearized asymptotic, or LLA model, to try to predict Bitcoin's price cycles. It's based on historical data. And the idea that the gains in each cycle kind of diminish over time.
So it's not just like pulling this out of thin air. There's actual data backing this up.
Exactly. And the really cool thing is the LLA model has been pretty accurate in predicting previous cycles. So this expert, he thinks we're in what he calls level 8 of the model right now, which would put Bitcoin's peak around $121,000. Still a gain from where we are now, of course, but nothing like the 13x return someone would have gotten if they bought back at $15,500.
Wow. I bet a lot of our listeners are kicking themselves for not buying Bitcoin back in 2022. I mean, who could have predicted this kind of a run?
It's true. Hindsight is always 20/20. But I think the point is, even if you missed out on Bitcoin, understanding these cycles can be really valuable for future investments. It encourages us to look for
opportunities.
Consider the potential for it. Exponential growth.
Absolutely. So even if you miss the boat on Bitcoin, understanding these cycles can help you spot the next one. But what about all those bullish factors everyone keeps talking about? Institutional adoption, ETFs, countries adding Bitcoin to their reserves. Surely that'll drive the price higher, right?
It's definitely play a role. This expert isn't saying they're not important, but his point is, a lot of this good news might already be priced in. We need to be realistic about the potential for future gains and not get carried away by the hype.
It's a really good point. It's easy to get caught up in the excitement, especially with all the buzz around Bitcoin. But let's change gears a bit and talk about another trend that's been everywhere, the AI explosion. Everyone's talking about AI these days, and the crypto market is no different.
Yeah, and the numbers are kind of mind-blowing. One of the sources we looked at shows that all the chatter around AI in the crypto market has gone up by almost 3,000% just in the past year. That's insane. And it's not just hype either. There's some real developments that are pushing this growth.
Like what? What's driving this AI boom within the crypto space?
One of the biggest factors is the rise of what are being called AI agents. These are basically programs that combine large language models, like what you've probably heard of with ChatGPT, with the ability to take action in the crypto world.
So it's not just AI understanding and analyzing data. It's about AI actually doing things in the market.
Precisely. Imagine an AI that can analyze market trends, identify opportunities, and even execute trades on your behalf, all based on, your own settings. It's like having a super-powered trading assistant working 24/7.
Incredible. But it also makes you wonder, what about the potential for AI to manipulate markets or even make decisions that hurt investors?
Those are definitely valid concerns, and it's something that, developers and regulators are actively working to address. Security, transparency, ethical considerations are super important when you're talking about AI agents. But even with those challenges, potential benefits too big to ignore.
It's like opening Pandora's box. We can't just shut it and pretend that AI isn't going to transform every aspect of our lives, including the financial markets. But this AI revolution isn't just limited to the crypto world, is it? We're seeing it across the whole tech sector.
Oh, absolutely. Just look at companies like NVIDIA, Apple, and Microsoft. They're all in on AI, and their stock prices have gone through the roof. NVIDIA's stock alone is up 172% this year, which I think says a lot about how the market views the potential AI.
Yeah, I'd say so. Seems like everybody's trying to get in on the action. But all this progress comes at a cost, doesn't it? I mean, look about jobs. One of the sources we looked at mentioned that. It's estimated that 1 in 7 workers have already lost their jobs to AI.
Oh,
That's a lot of people.
it is. And it's a conversation we need to be having. As AI gets more and more sophisticated, it's going to automate more and more tasks, potentially displacing millions of workers
Right.
across all kinds of industries. And that raises some really important questions about the future of work and how we adapt as a society.
Okay, so we've got this incredible technology that's also creating a huge potential problem. It's a double-edged sword.
It is. And that's where things get really interesting. Because another trend we're going to look at today, tokenization, might actually offer a potential solution to this problem.
Tokenization, I've heard that word. But to be honest, I'm not totally sure what it means. Can you explain it? And maybe how it connects to AI and jobs?
Sure. Basically, tokenization is taking any asset, whether it's a stock, a piece of real estate, or even a work of art, and representing it as a digital token on a blockchain.
So it's like taking something from the real world
Yeah.
and turning it into a digital thing that can be traded online.
Exactly. And this could completely change, not just finance, but lots of different industries. Imagine a world where you can own a tiny piece of a company, trade real estate in seconds, or track where a luxury item came from, all on a secure and transparent blockchain.
Wow, that's really efficient. But how does this connect to the job losses from AI?
Well, think about it this way. Tokenization creates new opportunities for people to own things and build wealth. Imagine artists selling tokens that represent ownership in their work, or musicians tokenizing their music rights and getting royalties directly from their fans. This gives people ways to make money from their skills and talents. That didn't exist before, maybe offsetting some of those job losses.
That's a really interesting perspective. It's like tokenization could actually level the playing field and create new ways to participate in the economy, especially as AI is changing the job market.
Exactly. And we're already seeing this happen with platforms like Solana. They're at the forefront of tokenization. It's built for speed and low costs,
Right.
making it perfect for all the transactions that a tokenized economy would generate.
So Solana is like the highway system for this new world. It's fascinating to see how these things are all connected. But I gotta be honest, with all this talk of AI, blockchain, and tokenization, it's easy to get overwhelmed. How does the average person even begin to understand all this?
It's a valid point.
Oh.
That's exactly why we're doing this deep dive, to break down these topics, give you the knowledge and tools. You need to make good decisions. You don't have to be a tech wizard to participate in this new economy.
True. But before we get too carried away with all the potential of this stuff, let's get real for a second. One thing that keeps coming up in our research is the problem of scams and traps, especially in the crypto world.
Yeah, unfortunately,
Yeah.
that's true. And we've actually had a couple listeners share their stories, which I think highlights how important it is to be cautious and do your research.
Yeah. One listener told us about getting locked into this hyphy insurance policy. They thought they were diversifying their portfolio, but it ended up costing them a ton of money.
And another listener talked about being misled by data about a crypto project. That turned out to be a rug pull. They lost a lot of money
Yeah.
because they didn't do enough research and relied on information that wasn't accurate.
It's a good reminder that even though this technology is exciting and has huge potential, there are still bad guys out there trying to take advantage of people. It's kind of like the Wild West.
It can be. That's why it's so important to be skeptical. Don't get sucked in by promises
Yeah.
or flashy marketing. Take your time, do your research, and remember, if it sounds too good to be true, it probably is.
Great advice. So we've covered a lot. Bitcoin price predictions, the AI boom, the potential of tokenization, and the importance of watching out for scams. Where do we go from here? What else should our listeners know about Solana and its potential in this new tokenized economy?
Welcome back to our deep dive into Bitcoin.ai and the future of markets. We threw a lot of big ideas out there in the first part, and now we want to give you some more practical stuff, tools you can use to make sense of all this, maybe even find some opportunities.
Yeah, I like that. A toolkit. So we talk about AI agents and tokenization, but how does someone actually get involved? Where do you even start? It can be hard enough just to keep up with all the headlines, let alone figure out how to invest.
It's true. And I think the key is to start with a good understanding of the basics. Cut through the hype and focus on what really matters.
Okay, so let's get specific. You mentioned pair trading earlier. Can you explain how that works and how someone could use it?
Sure. Pair trading is a strategy where you're basically betting on the price difference between two assets that have historically moved in a similar way. One example that came up in our research is pairing Tesla with MicroStrategy.
Okay, interesting. But why those two? What's the connection?
Well, They both have a lot of exposure to Bitcoin.
Okay.
MicroStrategy owns a massive amount of Bitcoin, and Tesla has invested in Bitcoin, even accepted it as payment for a while. So their stock prices tend to move with changes in Bitcoin's price, although not always in the same way.
I see. So the idea is you're not necessarily betting on Bitcoin going up or down, but on the price difference between these two stocks.
Exactly. You could use a tool like ARB Cloud to identify arbitrage opportunities, maybe IDSS to get a better sense of what's driving the market, and then something like ATR. To manage your risk, this allows you to potentially profit from those fluctuations between Tesla and MicroStrategy, even if Bitcoin itself is staying relatively flat.
So if someone's listening to this and thinking, hey, I want to try pair trading, what advice would you give them based on what we've
I'm
learned?
going to say, first and foremost, do your research. Pair trading is not for beginners. It takes a solid understanding of technical analysis, how the market works, and the discipline to follow your plan. One of the sources we looked at, who actually had success with pair trading, emphasized that. It takes time and effort to master. This guy spent months just analyzing charts.
Wow. 150 days straight, staring at charts. That's dedication, but I guess it shows that successful investing often takes patience and hard work.
Absolutely. And it's not just about pair trading. This is true for any investing approach. We need to get away from this idea of getting rich quick and focus on building
Solid understanding
of what we're doing.
Speaking of long-term strategies, a lot of people are curious about the classic buy and hold approach. Does that still work in today's market, especially with Bitcoin?
It depends. Buy and hold has definitely worked for a lot of early Bitcoin investors. But remember we talked about earlier, those really big gains usually come in the early stages of a cycle.
Right. So people who bought back in 2022 at $15,500, they're probably pretty happy right now. But does that mean it's too late to buy Bitcoin now and just hold it for the long term?
It's not necessarily too late. Bitcoin could still go up in value. But those huge returns we saw before might be less likely now that Bitcoin is more established.
But wouldn't you say there's also less risk now? Bitcoin doesn't feel as crazy or as risky as it did a few years ago.
There's definitely less risk
And
of it completely collapsing with the government shutting it down. But any investment has some risk. And Bitcoin is no different. We're still in kind of uncharted territory. And there are things that could impact its price, the economy, global events, new technologies.
Okay, so buy and hold might still be a good strategy for Bitcoin. But maybe with lower expectations than we had in the past. But what's interesting is that a lot of long-term Bitcoin holders are looking for ways to make their Bitcoin work for them without actually selling it.
Yeah. And that's led to the rise of all these new platforms and products aimed at Bitcoin holders. There are lending platforms where you can earn interest on your Bitcoin and even Bitcoin-backed life insurance policies.
So you could potentially hold on to your Bitcoin, hope it goes up in value, and also make some money from it along the way.
Exactly. But it's really important to be careful with these products. Remember those listener stories about scams. Well, some of these platforms are still pretty new and untested.
So the same rules apply. Do your research, read the fine print, and don't get blinded by the hype. But let's switch gears for a minute and talk about the stock market. One argument we keep hearing is that the stock market is the real scam with all the rigged rules and regulations and the potential for manipulation. What do you think about that?
Well, there's no doubt that the stock market has its problems. It can be hard to understand, inefficient, and vulnerable to manipulation. And that's why tokenization is so disruptive. Remember that analogy we used about the stock market data being a mess compared to a token on a blockchain?
Right. It's like comparing a clunky old machine to a sleek new gadget. Tokenization seems much more streamlined and transparent.
Exactly. It has the power to democratize finance, give individuals more control, and create a fairer system. Imagine a world where you can invest in companies directly without all the middlemen and fees. That's the promise of tokenization.
It sounds good, but even within crypto, there's a ton of hype and misinformation. How do we separate the good from the bad? How do we find the projects that are actually worth our time and money?
That's a great question. And that's where tools like ChainSpec can be really helpful. They provide a ton of data on different blockchains, like transactions, users, fees, all kinds of stuff.
So instead of relying on hype, we can actually look at the data and see how things are performing.
Exactly. For example, one of the sources we looked at showed how ChainSpec analysis revealed some problems with a project called ICP, which made investors more cautious. It highlights the importance of doing your own research.
Right. Data is king. But it's also important to remember there are different ways to measure how successful a blockchain is. Transaction speed, like Solana's 1 million transactions per second, is just one factor.
You're right. We also need to look at security, how decentralized it is, developer activity, real-world adoption. A blockchain could be super fast, but if it's not secure or doesn't have a lot of users and developers, it's probably not going to succeed.
It's a multifaceted thing. We can't just focus on one metric.
Exactly.
Yeah.
And that brings us back to Solana, despite being really fast.
Yeah.
And having a growing ecosystem. Its price hasn't really reflected that. And we've talked about some reasons for that, the whole FTX thing, competition from other platforms.
But there are some potential catalysts coming up, like the Fire Dancer upgrade, which will make it even faster, and the Sol Strategies initiative, which is kind of like what MicroStrategy is doing with Bitcoin, but with Solana.
It's a really interesting case. Will Solana take off? Or will it continue to lag behind? Only time will tell. But it's definitely a blockchain worth keeping an eye on.
With all these opportunities and potential pitfalls, being able to actually execute seems more important than ever. It's not enough to just have good ideas. We need to be able to act and manage our portfolios well.
I think that's a really key point. Execution is often the missing link. You can have all the knowledge in the world, but if you don't act on it, or if you don't manage your investments well, you won't see the results.
One of our sources talked about how they missed out on those early AI agent plays because they were too hesitant to jump in. They knew what was happening, but they just didn't act.
It's a common mistake. We can get stuck overthinking things, or let fear and greed cloud our judgment. That's why it's important to have a clear investment strategy, goals, and the discipline to stick to the plan.
So it's about having a system that helps you make rational decisions, manage risk, and avoid making emotional moves.
Exactly. And it's okay to make mistakes. We all do. The key is to learn from them, adapt, and get better over time.
So as we enter this new era of finance, where AI, blockchain, and tokenization are changing everything, it's not just about understanding the technology, it's about developing the skills we need to succeed.
Absolutely. Knowledge, strategy, and execution. Those are the keys to successful investing in the future.
Well said. We've covered a lot of ground. We looked at specific strategies like pair trading, talked about the pros and cons of buy and hold, emphasized the importance of data analysis and critical thinking, and even touched on the emotional side of investing.
It's a lot to take in, but hopefully it gives our listeners a good foundation for navigating this new financial world. But before we wrap up, I want to emphasize one more thing. The human element.
It really feels like we're at this tipping point in the financial world. AI, blockchain, tokenization, it's all coming together in a way that could totally change how we think about money, assets, even work itself.
It's a really exciting time. And I think it's important that we don't just sit back and watch. We need to actively participate. We've talked about tools and strategies, but ultimately, it's our human judgment and our values that will determine what happens next.
You're right. So let's try to imagine the future. What are some possible scenarios that could play out as these trends evolve?
Well, one possibility is that the traditional financial system and the world of decentralized finance gradually merge together. We're already seeing institutions like BlackRock and Citadel getting involved in crypto, experimenting with tokenization and blockchain.
It makes sense.
That's
More
interesting,
efficiency,
right?
lower costs,
Yeah.
new ways to make money. They don't want to miss out.
Imagine a world where stocks, bonds, all kinds of assets are traded 247 on decentralized exchanges, lower fees, more transparency, faster settlements. That could be a good thing for both institutions and individual investors.
That does sound pretty good. But what about regulators? They haven't exactly embraced crypto.
Regulation is definitely going to be a big factor, but we're starting to see a change in attitude. Governments are starting to realize that blockchain has potential, and they're exploring ways to regulate it in a way that encourages innovation, but also protects investors.
Yeah, we talked earlier about countries adding Bitcoin to their reserves. That's a pretty big deal. It shows that they're starting to take crypto seriously.
It's a sign that the world is recognizing the power of decentralized tech. But as with any major change, there will be challenges we've already discussed. The impact of AI on jobs. And as tokenization spreads, it could disrupt other industries, maybe leading to job losses and economic uncertainty.
It's like every solution creates new problems. So what can we do to minimize those negative effects?
We need to be proactive. We need to invest in education and training to help workers adapt. And we need to make sure that the benefits of these technologies are shared fairly, creating opportunities for everyone not just a select few.
That's where the human element comes in. We can't just let technology run wild without thinking about the impact on people.
Exactly. Technology should serve us,
Yeah.
not the other way around. It's up to us to use these tools wisely.
So as we move into this new world, it's not just about keeping up with the tech. It's about being mindful and considering the ethical implications.
I agree. And it's important to remember that even with all this change, some basic principles of investing still hold true. Do your research, manage your risk, think long term.
So before we wrap up, what's one final thought you want to leave our listeners with?
I'd say, if tokenization really takes off and transforms the global markets, we need to ask ourselves, who will be in control? Will it be the big institutions? Or will decentralized technologies empower individuals, create a more equitable system?
That's a big question. It reminds us that investing is about more than just money. It's about shaping the future.
Thanks for joining us on this deep dive. We hope you found it helpful.
Until next time, keep learning, stay curious, and as always, happy investing.
Bull Market Bulletin.